Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, October 31st. US and European equity markets were hit by a good news is bad news kind of sell-off yesterday as growth data on both sides of the Atlantic Ocean came in stronger than expected by analysts and somehow tamed the heated rate cut bets for the Federal Reserve and for the European Central Bank. Then, Microsoft and Meta fell in the after-hours trading yesterday as investors didn't really like their forecast or their extra spending plans, respectively. And the avalanche of economic data and corporate earnings is in full swing today and tomorrow. So tune in. We are going to talk about all that just now. So European and US markets nosedived yesterday, as I said, and the futures are in the negative territory early this morning at the time I am preparing this video. And well, there are a few reasons out there that explain and that justify the fall that we saw yesterday. And they are mainly, well, good news is bad news type of news. So first, Spain, France and Germany, they all revealed a better than expected growth number in the third quarter. Germany even eked out an unexpectedly positive figure in the third quarter, which certainly helped. Now, I wouldn't say helped to improve the mood, but helped to prevent sentiment from getting worse in the midst of a jungle of bad economic news. From there, so Volkswagen, for example, posted its least profitable quarter this week since the pandemic started, but said that they could eventually avoid factory closures if the workers accepted a 10% decrease to their salaries. Now, I'm obviously not sure that there will be an easy agreement to that situation, and the German unemployment change came in almost the double of what the markets expected yesterday, but still, seeing the German economy eked out that small 0.2% advance in the third quarter was a good surprise per se. Now, the encouraging GDP figures from the Eurozone came in with a cost though, because inflation in Spain and in Germany came in higher than expected by analysts. So inflation in Germany even crossed past the European Central Bank's 2% policy target and reached the 2.4% level in October. And the aggregate CPI data for the Eurozone is due a bit later this morning and is expected to brush up against the 2% policy target. And obviously this combination of better than expected growth and higher than expected inflation numbers means a decline in the European Central Bank rate cut expectations, and the latter is positive for the euro. So this is perhaps why the euro dollar tested the 108.70 resistance yesterday, which matches the minor 23.6% Fibonacci retracement on the September to October sell-off and also the 200-day moving average, but couldn't clear it. And I think that the reason why it really couldn't clear this resistance is because we saw mixed data come in from the US. There, in the US, the GDP update came in slightly softer than expected at 2.8% versus 3% printed previously, but consumer spending rose from 2.8 to 3.7%, defying the rising credit card debt and delinquencies in the US. And more importantly, PCE prices fell to 1.5%, and core PCE prices fell less than expected, but to 2.20%, which now is very, very close to the Fed's 2% inflation target. So September core PCE index is due today, and it is expected to show a further slowdown as well. But with the current data that we have in hand right now, some people now say that the Fed already achieved the soft landing that it was dreaming of. What a blast. So the US dollar was weaker yesterday because the softening inflation in the US could eventually allow the Federal Reserve to continue its rate cuts, but the downside in the US dollar remained limited because the latest economic data suggests that the rate cuts from the Fed could be moderated. Because look, the ADP report showed yesterday that the US economy added 233,000 new private jobs last month. That's more than the double of 110,000 expected by analysts and was also, well, way stronger than the number printed a month earlier. Now, of course, Friday's official jobs data from the US will say the last word, but Friday's figures could also bring some positive surprises on the table if the Boeing strike and the hurricanes had maybe a lighter than expected impact on the US jobs numbers. We will see. But for now, the US dollar index remains bid despite yesterday's weakness. The US two-year yield spiked higher yesterday as the Fed though scaled back their interest rate cut bets, but a 25 base point cut at next week's FOMC meeting remains well on the cards because the probability assessed to that scenario is around 96% this morning. Elsewhere, in the UK, the budget day couldn't give the pound the energy it needed to clear the 1.30 offers to the upside. Now, the announcement went as smoothly as it possibly could go given the bad news that finally hit the ground in the UK. So Rachel Reeves said that the country will raise taxes by, you're well seated, I hope, by £40 billion to boost spending on public services in the UK. The UK had also announced earlier, remember, that they would be boosting the gilt sales by almost £20 billion this fiscal year. But the good news is that the spending would be less than expected by the market. So that brilliant management of expectations helped traders keep their nerves together yesterday. So the UK's 10-year gilt yield spiked to 4.40%, but the sell-off in sterling remained contained given that the Bank of England's hope of seeing further inflation easing in the UK went up in smoke as increased spending pressures from the British government are now knocking on the door. And that's kind of is not positive for sterling, but it is not negative either. Now, finally, China posted a small but unexpected expansion in its manufacturing sector in October, a piece of news that may help crude oil prices extend yesterday's recovery. And the Bank of Japan maintained its policy unchanged at today's monetary policy decision, as expected by analysts after the election uncertainty, of course. And the governor Ueda also pointed out concerns about the increasingly uncertain global economic outlook. But the BOJ's board members remain committed to further rate increases if economic and price data in Japan align with its forecast. And that line kept the upside pressure in the dollar yen limited and gave some relief, some strength to the Japanese yen after the decision. Now, in crispier news, Microsoft and Meta released their third quarter earnings yesterday after the closing bell, and their results were actually looking good. Now, Microsoft posted a better than expected quarterly revenue growth in the third quarter, fueled by its cloud computing business and also Office tools, which actually integrate AI capabilities. But unfortunately, there is sometimes a but. Well, the company projected slower quarterly growth in cloud revenue moving forward, highlighting its challenge in bringing data centers online as quickly as possible or quickly enough to meet the rising demand for artificial intelligence services. So Microsoft shares dropped 3.7% in the after-hours trading. Similar with what we saw in Meta, the company actually posted strong quarterly results, improved advertisement revenue thanks to AI, but the weaker than expected user number in the third quarter and more importantly, the plans to continue to spend more on AI didn't really please investors. So Meta shares fell 3% in the after-hours trading, and today it's Apple and Amazon's turn to go to the earnings confessional. And these companies should not only meet and beat the analyst expectations, but also come in with a good looking forecast for the future to keep the AI enthusiasm going. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.